Instacart. So Instacart IPO valuation is slashed by 7.4 billion in the midst of consolidating startup market. Is this new valuation fair? And are you interested in investing in the company in the future?
Yeah. Shout out to Rashawn Williams. He put a lot of people in. Rashawn, you gotta come on the show. What you waiting on? Shout out to my guy.
I think he said it was his bedtime. It interfered with his sleep pattern, I believe.
Let's spin it through Santo.
Don't want to do that.
This message is not sponsored by ENL Lab. Mike,
we would not want to do that.
I thought that's what he said. That's not what he said.
This we was doing live shows. Now that we are occasionally pre-taping, maybe he can come on. And we got to get my guy Doug on here too. Do I like Instacart? Same rule. I have to wait 90 days for it to come out. I think Instacart, Stripe, definitely are getting crushed by the timing. Like, I wish Instacart could have went public when everyone was doing a little SPAC garbage, because I think that would have cleaned up the space a lot. I think that would have had a lot more value if it would have went public during that time. Will they do okay? Probably will over time. I think it's set to be anywhere from like 19 to $24. I think it's fair value at that point. But if they would have went public in 2022, I think they would have done a lot better. I'm not excited about it yet, but maybe after that 90-day period, if I can see some revenue numbers.
Yeah, the numbers are consistent from 2022 to now, which is interesting. But I'm not sure if they're a product of the pandemic. The numbers that they were seeing, the signups, right? Because everybody was home, everybody was ordering, and so it had that IPO in 2021. The valuation was at 40 billion. That's 80% less now, crazy. Right? So right now, it says it's going to open at 9 billion. So, I mean, you could have seen a huge pullback because the numbers would have subsided because the pandemic has somewhat subsided. I still use Instacart. I think it's a great company.
Yeah, I do too.
But when they had to file the reports, one of the key words that they said is that they recently have become profitable. Like,
that's a good sign.
That's a great sign.
That's a good sign.
That wasn't the sign in 2021.
Yeah.
Or 2022. The first quarter of 2023 is when they've actually received the profit, which is great. Because we know companies up until recently that hadn't made a profit. And so that's interesting to see. Is the valuation now fair? Perhaps. Right. 40 billion is a lot different than
that was crazy.
Right. Had it stayed at that level and people invested in and watched it pull back, that you would have felt a lot differently. I think at this level, with the existing customers that they have, the fact that they are profitable, and the level for expansion, I think it sits in a good place.
More importantly, I think the era of fast casual, like middle class luxury service, I would bundle them. Uber, of course, Instacart, DoorDash, all in that same bundle of like middle class luxury services. I think it's the end of the era for that, because now the money has to float. Of course, it's going to float to AI. I think a lot more money is going to end up floating to blockchain on the startup side. But like, I think this is a great business idea for 2009 through 2015-16, but I don't think it's going to have the same impact, especially if people have less money. You're going to end up wanting to go to the store or actually spending less. And I'm going to say it again, we need to build more companies that actually have an impact on everyone's life. Like, podcasting, just about podcasting, is not going to work.
So who's your customer? Right, I think like they have a niche. So if we're talking just middle class people, like I know, like you say all the time, like I order Uber Eats all the time. You might not have time to go to super. Right. We may not have time. Our lives are so busy. Even for us, like here, it's Instacart because we just don't have the time to be in the supermarket. Yes, there is an audience that's gonna go traditional route, and I need to see and I need to feel the products. But there are people in, I guess, from this generation that are like, hey, I know what I like. Just ship it to my house.
Yeah. Yeah, but it comes back down to the profit margins. Like, if I were running that business, hypothetically, let's say if you're paying a driver, even with all the service fees, maybe you may get 11% for every dollar that comes in. That's a really tough business model. Now, it's a great business model when interest rates are 0. When they bump up to 5.5%, and I can only imagine how many employees they have and how many investors are actually in the Series A and Series B, it's really tough when those margins are really thin. It's really tough.
Yeah, I mean, it's a good sign for the market that IPOs are happening.
It is.
So we got, you said ARM, Instacart, Klaviyo is another one that's going to be IPOing soon. So I know there was an influx. We saw the SPACs and we saw a bunch of IPOs in the pandemic. Then pretty much last year, good luck. Even a company like Stripe was still waiting to see when that's going to happen. But
yeah, they may have to wait to 27.
That's far.
Tough. That's tough. Yeah, because like if the environment isn't like the perfect time. Okay, let me ask you guys. When do you think, if you were a Black filmmaker or podcaster, was the best time in the last 6 years to put out a show?
Right before the pandemic.
2019.
During the pandemic.
When is the worst time? There's too many of y'all talking about the same thing
right now.
Sorry. Look, like Stitcher went out of business. Sorry, Rory Mall. Like, shout out to y'all, love y'all too. But when like podcast companies are going out of business,
yeah, this guy, he's putting them in
like the market is done. It's dried up. Timing is key. Time and sometimes like you have to know when to put your ego aside to say, hey, I want to do this. I want to be a part of something. I want to help. Thank God for all the work that we did years prior before we even did the show. A lot of business comes down to timing. Also, for homework, I want you guys to compare LVMH's net margin, Eli Lilly's net margin, Apple's margin versus Instacart, Uber, and Netflix. And that margin is the name of the game. When things get tight and tough, even if you lose your customer base or a considerable portion, like look at Disney, greatest American media brand of all time. They're having troubles. If you could have fixed, and this is why when we say don't have lifestyle creep, that's true in your business too. If you're going to spend $55 billion on a project or $55 million on a project, like you have to know where the return is going to come from. Have to know.
I was thinking of those companies when I was saying that we know companies that haven't turned profits. Because I remember our early episodes when we were, even before Uber was public. I think we did an episode and we were talking about the expectation of when they're going to become profitable. So. And
for all of you that are seeking funding, like angel investors and VCs will tell you that they don't want you to be profitable so that they can take over the lion's share of your business to then take it public and then push you to the backside. You can't play those same games if you have 60% voting rights in your company and you have 55% margins. That's the one thing I'll say about Zuckerberg to the end of time. That boy made sure he had majority voting rights and that those margins were high. You're not about to come in and take this what I stole from the Winklevi twins. Bet you don't.
Yeah.
This is business 101. You have to go study every great business. I think this is why it's really important to go study the rise and fall of every company to know what is happening. Mark Zuckerberg, every time I say something, he calls. Hold on, that's me.
Oh, well, like who is that?
Mark Zuckerberg.
It's Mark. He's focused. He want to talk about generative AI. How they ramping it up over there. Pause.